What's going on, everybody? Welcome back to Third Wave Trades. Thank you so much for waiting for me. Good morning. Hope you guys are all doing well today. Just catch up really quick on what happened so far. Sorry, I had a couple of things I had to get done this morning. Good morning, love never fails. Good morning, Sunny. Good morning, Javon. How you guys doing? So, a little bit more choppiness, a little bit more sideways action, which is honestly kind of what I've been expecting since we're waiting for the CPI data report tomorrow. So, sure today will be a little bit choppy as well, because like yesterday was. We're holding above the support at the moment. You see, we went below it, but we bounced back and closed above it. So that's a decent sign right there. I was doing a lot of analysis on the bigger picture last night. So later on, I'm going to go over a couple of scenarios that I think are going to play out in terms of the bigger picture. So it's important that we don't get lost in just what's going on and what's been going on for like the last couple of days. It's more important that we pay attention to the macro picture, in my opinion. Hey, Third, how's it going? It's going good. How you doing, Kasim? Yeah, let's hope the market does bounce here. I think there might be a little bit more chop today just because of CPI data report that's coming out tomorrow. A little bit of uncertainty there. And then again, like we said yesterday with Tesla, we got earnings coming up, so there's that uncertainty as well. Let's see. Let's hope so. Is there more weakness? Um, right now, I think that I personally, I think there is room for it to pull back a little bit more if it really needs to. Uh, like a hard stop loss for me would be at the 255 area because that's where our 21 EMA is. So anything above that, in my opinion, is still bullish. So I mean, there's room for it to drop back down to 262 in terms of like the count and everything, but it also I could also make the argument for why this correction is done. But this right here also seems a little choppy, right? So this might just be like it might be like another wave down, something not as extensive as this, but possibly back down to like 260. Um, like the 260 to 265 area. Critical level testing yesterday. SPY close. Gonna check out SPY in a second. I think Tesla will chop all day below 270. Yeah, I think so. I mean, really, the way that I'm looking at it is that I'm just waiting for this correction to be complete. And I think either the correction could have completed here, right? And you can see I have it drawn out as a WXY. Um, so it's very likely that the correction did complete down here, and now we're looking to go higher, right? So let's see if we can maintain this level over here and then take out this high. If we can, then we should be making on our way to making higher highs and higher lows. If we end up pulling back a little bit more and taking out this low, then in my opinion, that would basically be like the last leg of this corrective move, right? So it could possibly go down, like I said, that 260 to 262 area for one more push lower, and then maybe bounce from there. Hey, Javon, what did you miss? Not much for me. I mean, because I just got on right now. Had a couple things to do this morning. In terms of the price action, not so much as well. It's just kind of we were just discussing how it's very likely that it will chop a little bit more today, given that we have the CPI data report coming out tomorrow and everything. So it's creating a little bit of market uncertainty. So in terms of the wave count, Elliott wave count. Tesla is still in its kind of in this corrective phase and has room to drop a little bit more. I think it doesn't have to, but if it does take out this 265 low, it's not necessarily I think a bad thing. I mean, what I mean is I don't think that necessarily is just the play is done, right? So I think it has room to drop a little bit more. And on a macro scale, I'm looking at it to, we have which is our ultimate support around the 255 area, our 21 EMA. So anything above that, in my opinion, is still bullish for us to finish out this move higher. Retest of 263, possibly. Yeah, yeah, possibly. Right now, there's no real reason for it to bounce, in my opinion, just because, like I said, CPI data report. It might just be like chop for the rest of the day, honestly, like chop all day, just like it was yesterday, and then tomorrow could be the catalyst that we need, right? Because the way that we use catalysts in Elliott Wave is that we kind of already have a count, and the catalyst usually like CPI data report, earnings, things like that. They usually act as a catalyst to make those big moves happen that we already kind of like forecast in a wave now. So I think tomorrow could be a potentially nice day for a bounce. Yeah, it is choppy. It is choppy. But it's choppy, but it's also resilient in my opinion. Like Tesla is pretty resilient, and I think it's actually more resilient than the overall market. Um, the overall market has been falling more and is closer to its 21 EMA than Tesla is. Let's see if I pull up this spy. This spy. This. Let's go to a 1 day on the spy. Why like so spy has actually been see how close it got to its 21 EMA. It's closer to it. It's more of a uh, chopped movement than Tesla is. Tesla is still holding decently strong above its 21 EMA. So it's just overall market. The overall market is pulling back a little bit and retracing. Presumably because of the CPI report. So that's also affecting Tesla. And then there was that news yesterday. The news yesterday that came out about the Nasdaq rebalancing, and that's obviously had a pretty big shakeup on those top seven companies, right? So Apple pulled back a lot, but actually really good news for us and the market overall. Let me see if it's here. Apple got a price upgrade. Neo's been pretty decent as well, guys. So remember, I'm keeping an eye on Neo to rotate into after Tesla. But yeah, see Apple right here. They got a price upgrade from was it JP Morgan, which was pretty big. Oh no, wait, hold on. Sorry, Jeffries analyst upgraded more JP Morgan to a buy, but then Apple also got an upgrade. I saw it there earlier. Was it Goldman? I have to go find that, but I'm pretty sure I saw an upgrade on Apple to 200. So obviously, Apple has a big pull on the overall markets by Triple Q. So that could be a decent catalyst for Apple. And then in terms of the wave count, I think Apple still has room to run up. I gave it a price target of 200, like about almost I want to say a month or 2 months ago, back when it was at like 180 over here, like around June 8th. I gave it said that it was very likely going to 200, possibly even higher. And it looks like we're finishing up this third wave on Apple. Oh, sorry, this fourth wave. We finished the third wave, and we're getting like this fourth wave retracement, and we still have room to go higher. So I just bring up Apple to say like that a lot of the tech stocks are pretty much doing the same thing and have room to go higher. And then if we look at the triple Q, right, which is obviously uh, a big has a big impact on all the tech stocks. Uh, this is the count that I have for it, right? So I have 1, 2, 1, 2, 1, 2. three, four, right? So basically, we're finishing up this sideways fourth correction, right? So once this finishes up, I see the triple Q going higher too, right? Possibly reaching like 400. Some more chop and correction to move higher, and that's how the markets move, guys. The markets move in like a stair step manner, right? They're not just gonna go straight up. So, and they're not gonna go straight down either. Within these moves, they're stair stepping up, and then they're stair stepping down, right? And then within those moves, it's the same thing. So, I mean, that's what we call the fractal nature of the market, and that's something that we discuss in Elliott wave theory. So don't worry, guys. In my opinion, Tesla, I think, is still holding pretty strong, pretty resilient. It's fun. It's fun to watch you know, the minute chart and the 5 minute chart, see what exactly is playing out. But sometimes you just can't get lost. You can't lose sight of the forest for the trees. You know? So the bigger picture is, in my opinion, that Tesla's going higher, the market is going higher, Triple Q is going higher, Spy is going higher, Apple is going higher. I mean, that's my opinion based off of the analysis that I've been doing. And also, if you take a look at it, um, if you take a look at it, Bitcoin looks like it's going to really rally. You have all these new stocks that are making like not all time highs, but like 52 week highs, right? So like the highs that they've been in more than a year, right? Like Mara, right? Because Mara is a Bitcoin mining stock, it hit $17. I've been talking about Mara for months, guys. For months, I've been talking about it. Back when it was down here, saying that we were going a lot higher. Mara, Riot, Clean Spark. Then you have like the other EV companies pulling up, like Neo and Rivian. So I just see the overall market like coming out of this quote unquote recession. That everybody's kind of like just been fear mongering about. I've been saying since January. Anybody who knows me, who's been talking to me, I've been calling for like a bullish market since January. Like on Tesla when we hit this bottom like around $100. So, and even then people were like fear mongering and saying like, it's everything's gonna get really really bad and everything's gonna drop, and we rallied so much since then. Tesla is not broken. No, I'm not talking about Tesla. I'm talking about like Mara and some of those other companies, some of those smaller companies like Mara and Riot. Bitcoin is looking like it's really starting its rally. I'll show you guys Bitcoin. This is the count that I have for Bitcoin right here. So essentially, I just see Bitcoin basically going back and retesting its all-time highs of around 68, 69,000. Look like we're in a 1-2-1-2 setup. So the fact that we're seeing a little bit of chop over here, we'll go to a. We're above our 30-week. First off, our 30-week moving average, which is a stage two breakout after this start sharp decline after making this base under the 30-week moving average. We got the breakout. Bitcoin is a solid buy right now, in my opinion. Um, and not just Bitcoin, but then also you have Ethereum. And I mean, I don't know how many of you guys trade crypto over here, but even if you don't, there's like kind of just speaks to the overall general market, mindset that we're going to rally in crypto, and I'm also seeing the same thing in a lot of the stocks as well. So yeah, guys, I'm still bullish. I'm still bullish. I've been bullish since January. All right, let's see how we are moving here right now. So above our 5 EMA, above our 9 EMA, let's see if we can close there. Our side looks like it's getting close to 50. See if we can break above it and hold. Pre-market, you guys can see basically this 270 has been providing some resistance. We got over it in the pre-market and the after hours, but we pulled right back, so we couldn't hold. Same thing over here. We pulled back, we couldn't hold, and that's kind of been acting as a ceiling right now. So I think if we could get above 270, it would be a really good sign. If we get above 270 and hold above 270 for the end of the day, which I think is, I really do think is possible. Like this support has been holding. We've been wicking below it, but we haven't closed below it and gotten confirmation. Over here, we closed below it, but we came right back with this candle. So that's not bad. That's not too bad. Pretty decent price action right here. We have 2.5 minutes left on this candle, and the volume looks like it is picking up above the 50 on the RSI. So I'm not mad at it. Looks like we're going to get the crossover also at between the 5 and the 9 EMA. Oh, sorry, I missed that. You said stock goes up the stairs and comes down through the window. That is very true. That is very true. When things pull back sometimes, and the wave count, those are usually those huge C wave moves, um, where stock just goes plummeting down. What time do you use the wave theory on? So you could use the wave theory on any time frame. That's the beauty of the wave theory. The whole idea behind the wave theory is that the market moves in fractal, that patterns repeat, and that um, like basically the fractal nature of the market is this, right? So say you have 5 waves up, right? Each one of these waves are made up of 5 waves, right? So the impulsive wave is made up of 5 waves, right? And 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 this wave is made up of this impulsive wave is made up of 5 waves, and then this impulsive wave is made up of 5 waves, right? And then within these waves, those are made up of 5 waves, and so on and so on and so on. So like infinitely for like an infinite time scale, zooming in and zooming out. That's what we mean when we say that price action is fractal. So you can do it on a 5 minute time frame, and you can do it on a larger time frame. So when I say over here on the daily chart that we are in our third wave over here, this is our third wave on the daily chart, and this is our first wave. So first wave, second wave, third wave, right? We're finishing up our third wave. Within our third wave, you can count 5 waves: one, two, three, four, and five, right? So that's kind of how that works. Decent price action. Let's see if the volume kicks in a little bit more of our 5 EMA. Like I said, a strong push above 270 and a hold um, might be the sign that this low is in off this corrective move. pull this up to the side really quick and just gonna take a look at the bigger picture for a second. I was doing some analysis last night, just trying to see where we fit in, where uh, where we stand right now in this third wave move. And I told you guys before, I had a bullish count and I had a less bullish count, and I've been sticking with the less bullish count, but um, I think the argument could be made that we're actually in a more bullish scenario. But I don't really want to just start talking about that just yet because I think we need to get we need to know that this low is in before I start going on about that. But one thing I will mention is let's hide this. It's actually a pretty decent. We have this pretty strong trend line right here that we just bounced off of when we hit the low yesterday around 264. Or we may not have hit it exactly. That's why we might have a little bit more room to pull back to 264. But it's a rising trend line, so I'm looking to this as support as well, around 264 to 266. It may have bounced already from there, but I think that's a pretty strong support level right there. And then this is the overall pitchfork that we are in. So if we could just bounce off of this right here, I think we'll trade above and get back to this channel top and then possibly break out. Take a look at how we're holding up on SPY right now. Mhm. Sure. 5 minute on SPY. So we're back at 440 on SPY. Got a nice little bounce over here. Not sure if some of these lines are. We'll keep an eye on the SPY as well. And then triple Q, keep an eye on triple Q as well. A nice V-shaped recovery. this green because it's support, and we'll put a resistance level up here for now. Let's see if we get above 270 today, guys. I mean, we're at 270 right now. Strong push, but we have to be able to get above it and hold that level. Nice. Push there. A minute 30 left in this candle, and we're already at a pretty decent volume size. See, there's the resistance. It's holding. It's been holding all through here. About a minute left in the candle. We could make a decent attempt here to get over this. We're above our EMAs, size 1250 right now. Volume looks like it's still coming in. Maybe not this candle, maybe the next. If we break above this, I think we should have more volume come in. Push us up to 273. So that's where we are kind of in a bigger picture. There's a 3 hour chart on the left. Still holding on around here. I think we're looking to kind of like form like a little bit of a wedge here between that resistance and hopefully a rising 5 EMA. And if we can break through, should push higher, but we could always break through on this side as well to the downside. So one side is going to have to give. Holding pretty decently again against that 5 EMA. 10 seconds for this candle to close, and then we will see if we get closer to that 270.88. That's a pretty decent resistance over there. Like it's been rejected over here at the open in pre-market one, two, three, 3 times there. Over here we got above it, but we're unable to hold above it. Same thing over here. And over here, yesterday is where we first kind of made that resistance. So pretty strong resistance. Looks like again we're pulling back. If we can't get above that, there's a very good chance that we'll just come right back down. We'll break below our EMAs and come right back down to this level. Maybe we'll just range trade for majority of the day. I mean, because our support has been holding pretty decently as well. But I think if you test a support or resistance enough times, it's going to gonna have to break eventually, right? It's like chipping away at something slowly. You're gonna eventually get there. So my gut feeling is that this resistance is gonna give, but I don't know. We'll see. Spy Spy's pushing up a little bit. Spy has their resistance right here. Another resistance. Not really. So for Spy right now, the near term resistance is gonna be that level. And then for the triple Q is pushing up too. So see if they could bring Tesla with it. You guys are kind of quiet today. You guys nervous? Anybody have this week's expiry? You want to play puts? I think you can definitely play puts. I would wait for a break, probably below this level because it's been holding its pretty decent support today. We went below it a couple of times, but if you wanted to get in on an early put, then yeah, I mean, we reject over here. But so far, I mean, we're still holding above our 9 and our 5 EMAs. So maybe you see a break below those and you see a crossover, RSI dip below 15. Those are all indicators that I would look to. And then also on the pullback, if price drops, then volume picks up. Yeah, exactly. It's in a tight range right now. I don't see it breaking out one way or the other. I think there's a little bit more room for upside, for downside, but ultimately, I think we pulled back a lot from this top. That I think that basically, the correction is, if not done, it's really like really close to being done. So I think there's more upside coming now than downside. But just got to use confirmation on the breakouts. Whenever you're trading in a tight range, it's probably best to play a breakout. That's like stressing me out a bit. Yeah, me too. I mean, it's definitely stressful. But again, I mean, you just gotta remind yourself, like, what are the reasons? What are the reasons why it's behaving the way that it is? Volume has been low for a few days. Exactly. Volume's been low. Um, we have uncertainty in the market for the data report. We have uncertainty for Tesla, especially because of earnings. And neither side really knows right now. Neither side really knows. You have people on both sides. You have people making the bear case and the bull case. Um, I'm not a perma bull or anything like that, but I just right now I am mid to long term uh, bullish. Short term, you know, we've been bearish on this pullback and everything, and may have a little bit more room to pull back. But after that, I see it's bouncing back and pushing higher. So everyone is with that side. Exactly. Because really, right, like once the CPI data report comes out, then the market is basically going to let us know whether we're taking whether we're there's like two paths essentially right now. There's going to be a bearish path and there's going to be a bullish path. And using like the wave theory, I can basically draw up both of those paths. And whatever comes out tomorrow, the market is basically going to let us know if it's going left or if it's going right, and then we just follow that path. But until then, we don't really know. We could just kind of like make guesses on which path we think it's going to take, and I think it's going to take the bullish path tomorrow, but I can be wrong. So it's best to just wait and see, let it pick its path, and then we get off the sidelines and and play the path accordingly. I think they may be a sell off in the afternoon. Very possible, very possible. But even if there is, me personally, I don't think that the sell off would take us too much further down than what we've already been. So we bounced at 264 yesterday. I think we have room to fall to 260. Definitely a chance for us to drop back down to 260, but I think we'll get the bounce again. Again, guys, long term speaking, um, until we break. All right, so two things. The reason why I say the 21 EMA, it's a great marker for a trend, right? For a long term trend. But besides that, you guys can see we're still making higher highs and higher lows, right? So as long as we're doing this scenario, we are bullish. Now, if we were to come here and then start making lower highs and lower lows, that's when you're in a downtrend. Right now, um, you know, the same thing that played out over here, right? After we had this pullback, I mean, I'm sure there were plenty of people who were bearish over here and saying like, "Oh, this was the end of the play." And what did we do? We bounced right off of our 21 EMA and we pushed higher than we went before, right? So it's just, in the bigger picture, it's just a temporary pullback. Like, look at the up move compared to the down move, right? So, so just keep that in mind. Tesla's a great stock to sharpen your skill and find your edge. I agree. I think Tesla, especially in terms of like the Elliott wave, it actually reacts very, very well to Elliott wave count, like to Elliott wave theory. And Elliott wave theory is not a perfect trading strategy. It has, it's not always correct. It has its moments and stuff like that, but I think it gives one of the best. It's one of the best tools to use in my terms to find a high probability trade, and then you use it with other like indicators and oscillators and moving averages and things like that to make a nice strategy. But it's not perfect like anything. But Tesla reacts very well to it in terms of like the levels that it pulls back to, like Fibonacci levels that it pulls back to on retracements, extensions, how far it goes based off of like Fibonacci levels, in terms of the wave count. Like this was like a perfect three wave count over here for a correction after a very solid five wave move to form this first wave. So there's a it reacts very well. So I think it is a great stock to learn on, to learn the Elliott wave principle on, and then also other things as well. 5 EMAs, like your moving averages, your volume, your RSI. In on. I love never fails. Well, what do you mean by in on? Again, on a small time from now, we're below hour 5 and our 90 EMA, so that's That's short term bearish. On our 15-minute, we're breaking below them as well. See how's the overall market doing. The market's pulling back a little bit, which kind of funny. Tesla pulling back, triple Q as well. When do you think is the best to consider a call? 265. If we were to drop back at 265, which is kind of like where we bounced yesterday, right? Around 264, 265. Um, you would basically be seeing a kind of like double bottom type of situation forming over here. So if you saw a strong bounce, I think that that could be a decent entry point. Um, if it keeps falling, right? If you see strength as it's breaking, as it's coming towards that 265, then you don't want to catch a falling knife. So uh, then you kind of just want to wait to see where it can bounce after 265. Just draw out a couple of levels, which we could do right now. Honestly, we could draw out some levels on a larger time frame, like after 265, right? Which is this low. You could use this previous peak 264. You could have a level like right around here, around 261. I could see it dropping down to like two within that 260 to 262 range, and it would break the 260 262 range, and then 255 is our in my mind the last and final like strong support on this rally. So if it drops towards like 255 and you see a really strong bullish reversal pattern, like an engulfing candle or a hammer candle that wicks out at the bottom of the 21 EMA, um, I think that would be a very decent buy. Waiting for Tesla to bounce toward earnings 7/19/23. What's up, Alberto? Thanks for stopping by. Um, yeah, we were kind of talking about how like this correction looks like it's just basically like a little bit of market uncertainty with the CPI report coming out tomorrow, and then as well as a little bit of uncertainty because of Tesla's earnings. So there's a lot of people just sitting on the sidelines. That's why we're not getting a lot of volume. That's why we're chopping a lot. And honestly, that's probably why this pullback is really, in my opinion, it's just a lot of big money just taking profits because of that uncertainty. So, big money got in on this play probably somewhere down here. So for them to take profits at this point, like Kathy Woods has been doing, um, it just makes sense. You make a nice play right here. You take your profits, and then you wait for the uncertainty of the market and Tesla's earnings to be over, and then you decide again. Now, do you want to go short or do you want to go long, right? So that's really all that I think it is because this pullback, it's not it's not an impulsive move to the downside. It's chopped on the way down, right? Compared to the movement up. So that's all I think it is. Me personally, that's what I think it is. I think it's just uh, a choppy move down, which consists primarily of people profit taking, low volume, people getting out of their place to await for the uncertainty of the market and Tesla to be over, and then we'll see the volume come back in, and we'll see which direction the stock is moving. I have a slightly bullish bias right now, but we'll see. I could be wrong. Any thoughts on the VWAP? I'll be honest with you. I used to use the VWAP like early on when I first started trading, but I don't really use it anymore. I haven't in a long time. I'm kind of like I don't rely on indicators and oscillators too much. There's just a very few that I rely on, and primarily like my wave count and just price action. So price action to me is the most important thing. Price action and volume, um, and then how I do my swing counts, right, which is based off of either Elliott wave or stage analysis, uh, and then like just a couple of indicators like the RSI. I think is pretty useful, or the price oscillator, which helps me, which I only use those because they help me with my count, and then it's just and then just moving averages. Like I don't really. You could use the MACD to help with your wave count as well. I don't really use the MACD. Um, I don't really use the VWAP. I don't use. Uh, I do use the stochastics sometimes on a larger time frame. Like there's a strategy that I have using the stochastic indicator with the 21 and 50 EMA, but I try not to use um, too many indicators unless I'm using them for the purpose of specifically helping my waveform. That's my style of trading. With the Elliott wave, just kind of like you just want to. It's like you just use the KISS method, right? Like just keep it simple, stupid. Like that's it. Try to keep it as simple as possible. Don't overly pollute your charts with indicators and drawings and things like that. Just know where your counts are and where you are on your moving averages. And to me, it's a simple but like a pretty effective strategy. I don't know, guys. I think we're breaking 270 today, and I think we're gonna hold above 270 today. That's just me. What do you guys think? I'm trying to bring some bullish optimism into the chat right now. I know everybody's like down about it and worried and doom and gloom. But I don't know. I feel like the worst is behind us now. Let's hope so. Let's hope so at least. I mean, either way, without volume, we're not really gonna get anywhere. So we'll really know for sure tomorrow. Right now, we really might just keep range trading. Today seems quite tough. Yeah, I mean, I don't think it's tougher than yesterday. Yesterday was really bad. I mean, yesterday we had this pullback, right? So I mean, if we could manage through yesterday and drop it from 277 all the way down to 264, I'll take a little bit of sideways action. I don't mind the sideways chop. I would much prefer that as opposed to price dropping. Sideways chop is just to me like consolidation, holding a level, building strength, building a foundation, building a base, which we can break out on. You know, so it's tough. It's tough to see it, right? And especially if you have if you're in calls and you have to deal with like theta decay. which is why I think it's always like really, really crucial that you give yourselves enough time, like, um, and just pay a little bit extra premium to mitigate that risk. I'd rather see you fill the gap to 262 and have a bigger bounce. Yeah, I honestly, sometimes that's better if it just goes ahead and it's done with the correction ASAP, so this way that bounce can start ASAP, and again, you can save time on data decay. I agree. I'm focusing on price action and volume. Price action and volume is the most important thing, in my opinion, from technical analysis. Without really knowing how price moves and volume, uh, all the indicators and oscillators, they really just feel. And a lot of people do it. I did it too when I first started trading. Like you don't really know where to start, and there's 1,000 different indicators, and your chart is it looks like a kindergartner's drawing or something, right? With like every color trend line and everything on it. So I've been there before, but definitely what helps the most is really knowing price action and volume. I shorted three contracts at 130 December 15th. What would be the best way to cover it? You shorted three contracts at 130. So you hold on one second. Sorry about that. So you shorted three contracts. Also, let me make sure I'm getting your name right. Takelapeli. Hope I said that right. But you shorted three contracts in December, and you still never covered it. I mean, prices went up a lot since then. Me personally, and I don't want to give you any bad information. Uh, I I wouldn't. I mean, I personally think that the stock is going to go a little bit higher. Me personally, so um, I don't know. What's your time? What's your time limit on those contracts? When do they expire? I mean, I'm guessing that you got like leaps, like far out puts. If you have time, you could always wait for like a pullback or a correction to happen. But in the medium term, I personally see the stock going a little bit higher. So I'm not really sure how you should go about covering it, and it all a lot of it depends on how much you are willing to of a loss you're willing to take and stuff. I use the 20 and 200 EMA. There is room up. If 270 breaks, there is room up to 272. I agree. I agree. The 273 area is kind of what I have drawn, but yeah, just within this range, if we could break, if we could get out of this range right here and break above here, then we could possibly trade in this range for a little bit, which is again taking small steps up. Pray. Is that in response to Takapeli? Patience, guys. You're not covered yet. You got it December 15th last. Oh, you have till December 15th of this year. Okay, I thought you were saying that you bought puts in December. That would make sense, right? Because we were above 130. Okay, all right. My mind wasn't working, guys. I barely finished my cup of coffee today, so I have to actually go heat that up. All right, that makes sense. So you have puts expiring December 15th of this year for a 130 strike. Yeah, I mean, possibly sell, but I mean, I mean, you're probably down on that pretty bad. When did you get those actually? It really all just depends on when you got them. Like, are you up on them right now, or are you? Yeah, you're probably up on them right now. Like, did you buy those puts when we were up at like around 284? Because if you bought the puts when we were up here around 280, 284, and you bought $130 puts for the end of this year, you should be up. Last month, it was a covered call, but I sold the stock. Okay, so you had a covered call and it was 230, not 130. All right, so basically you held shares and so you had a covered call and you sold the put, and now but but yeah, so you should be. Are you still up on it? Maybe I'm not just following the scenario too much. I really don't do too much selling, like selling covered calls and stuff like that. I really don't. I'm mostly just an options trader. Um, where I'm mostly just buying. But I do understand like having shares and selling covered calls and stuff like that. So help walk me through it. You will broker 300 at two. Oh, you owe your broker 300 at 230 for December 15th. 300 shares, 300 stocks. Oh, let me think on that for a little bit. I don't have an answer for you off the top of my head on what's the best way to go about that. If you were to buy, you basically you owe him 300, so you need to buy 300 shares right now. Is basically what you're saying. And what's the best price to cover them at? So again, like I can just tell you kind of like, I mean, I'll let you make that decision on when you should cover it yourself. And quick question, you owe him 230 for December 15th. Okay, so December 15th you owe him. So there's time, but now the question is really, it just really thinks on how you think the stock is going to play out. I personally see it going higher in the uh, short to medium term. But there is a chance, obviously, like you could make the bearish scenario that we will drop a little bit more. Um, uh, so I don't know. It's tough. It's tough. Like I don't want to give you any financial advice and tell you like, well, cover now because we're going to the moon or something like that because I don't know that. And my analysis, I think we're going a little bit higher, but it's hard to tell you that. It seems like he sold three calls, strike price of 230, expiring December 15th. Yeah, yeah. So basically, he now owes his broker um, 300 shares by December 15th. So he needs to buy at the best price is essentially what he's asking me. I assume. So it's really tough only because I you know I can just tell you what my analysis is and what I think the stock is going to do. Um, So I don't want to tell you to buy now and to cover yourself, right? I don't want to give you any financial advice because I am not a financial advisor and I don't know your personal situation and things like that, right? So I'll just tell you like my analysis, Pekapelli, and then uh, you know, based off of that, if you find it useful, you can try to make like a somewhat informed decision and do a little bit other due diligence. And I think the best way is to find out what's the most bullish scenario and what's the most bearish scenario, and then kind of identify where you stand in terms of those scenarios. I'm assuming that you were, well, I don't even know. Where do you stand right now in terms of how you're viewing like the stock and the market in general. Are you bullish? Are you bearish? I think that would be that would basically be your first step. Do you see the markets going higher, or do you see them going lower? We're pulling back right now, breaking support a little bit. We're testing it again. I mean, I personally, I see Tesla having room to drop down to 255, and if we break 255, uh, if we break 255, then if we break 255, which is our 21 EMA, essentially, I think that we could really start to flush, right? I personally don't think that that's what will happen. I think we'll bounce if we do get down to our 21 EMA, right? This is the bigger picture, right? So I think we would bounce if we came down over here. But obviously, we finished the rest of this gap, which is like around 260, 262. Um, and then if we do break this 21 EMA, which is around 255, we have this gap still around 230 to 237. So I don't think he has 130, Javon. I think he meant 230. Is still somewhat reasonable. 130 would be completely unreasonable, but 230 it's not out of the picture, right? Because if we were to break this 255 EMA, 21 EMA at around 255, 257, we do have this gap that we could come back and fill. We got in there a little bit, but we didn't close it completely. So, and that would also align with our 50-day EMA. So I think the best way is, you kind of just have to monitor it still for a little while. If we don't bounce just yet, I mean, in terms of strategies, like there's also you could cover some of it right now if you want to be safe, and then maybe if it drops down to 21 EMA, cover some more because then you don't know if you're going to get a bounce, and then if it breaks at 21 EMA, cover the rest. Like there's a lot of different things that you can do that you're going to have to try to make the best financial decision possible. But in terms of analysis, we do have room to come down to the 21 EMA. If we break the 21 EMA, there is a chance that we come down to this gap and our 50-day EMA, right? So that's your best bet. Um, but if we start to bounce higher, obviously we could push back to the top of the channel, which will probably take us to around 290. Do you think 255 before or after earnings? Uh, I'm not saying that necessarily we will drop to 255. Love never fails. I'm just saying that we have room to drop to that level, and as long as we are above this level, we are bullish. If we break below this level, then we would be bearish. Then we would like really have to change our analysis on what we think the stock is going to do. And I just keep reiterating that my own personal belief is that the 21 EMA will hold, and it's not just based off of what happened over here that we held. It's based off of where I think we are in the wave count and the bigger picture. Stage analysis being above our 30-week moving average in a stage two breakout. So the overall picture I have of the market and Tesla uh, is why I think we will end up holding. But do I think that we'll drop to 255 before earnings? Uh, it's possible, and I could see that scenario playing out. Like, so for example, like let's say CPI data report came out bad tomorrow, the whole market drops. Nothing specifically bearish about Tesla, but the whole market drops. It'll take Tesla down with it, right? So I could see that scenario playing out. 255, yeah, 248, 230, then hold. There is a bearish case. Yeah, there is a bearish case to be made, and a lot of it's going to be dependent upon, I think, the data that comes out tomorrow, uh, which is going to be the overall market. And if the overall market tanks, then Tesla could obviously tank as well. It might be a little bit more resilient than other stocks, but they'll still pull back. Um, and and then there's their earnings as well. So their earnings could be a miss. I don't really know their I don't really have a good grasp on their exact fundamentals. I know there's certain concerns with their margins, but you hear the reports both ways. So, and then it's not just what exactly is reported on their earnings and their fundamentals and stuff like that. It's how the market interprets it. They could have great earnings, but then they provide terrible outlook, which I wouldn't. I'm not saying it's the case because Tesla is usually very good about that. And I do think that Tesla is one of the best companies to be an investor in long term. I think they have an amazing outlook. But I'm just giving you guys an example of what can some scenarios that you see happen often in earnings, right? Like earnings could be a beat, but then outlook is bad, so the stock drops. Or earnings could be bad, but then outlook is good, so then the stock runs. And there's a bunch of different scenarios, so it's really hard to say. So I think trying to guess on what's going to happen with that is kind of like a fool's task. It's really why I just stick to the price action because I think all the information that we really need. And this is not coming from me, guys. This is coming from like seasoned traders, some of the best traders ever in the world. Like Stan Weinstein is a legend in trading. And if you guys don't know about him, then definitely go read up on him. He came up with the stage analysis, one of the all-time greatest traders, right? And he, in the first chapter of his book on how to like profit in bull and bear markets, that's what he talks about. That any news, any piece of fundamental news or catalyst or things like that is already priced into the in the price action. It's already it's all revealed in the price action. The same is made. Same case is made by uh, I forget his Robert. I want to say his last name Prechter. He's the guy who wrote the Elliott Wave principle based off of Ralph Nelson's theory. And same thing, right? The price action contains all the information that we need to know, right? So that's like the technical analyst's primary uh, way of buying and selling stock is based off the price action because we believe that everything is factored into it. I mean, I'll go more into that later if you guys want to hear me talk about that, and I do talk about it in the Elliott Wave course. Question: if Tesla is trading with the market for a period of time, won't the market's wave count mess with Tesla's wave count, and that convert the fourth wave down from three counts to five, the current fourth of the medium term third? I know what you're saying, Moon. So Tesla does have a tendency to at times like deviate from what the market is doing, right? And uh, like, let me see how can I explain this. Let's say we're in a fourth wave correction, right? And let's say SPY is doing a deep fourth wave correction. Let's say SPY is doing something that we call a zigzag, right, which is a deep correction. And let's say Tesla is also doing a fourth wave correction, but Tesla is just a more resilient stock, right? Tesla is stronger than the sum of the 500 stocks that make up the S&P 500, right, by itself, right? So they might also be at the point where they're doing a fourth wave correction, but Tesla might just be doing a flat, right? So they're both fourth wave corrections, but whereas the SPY is like um, doing a much deeper retracement, a zigzag, and pulling back to like a 61% retracement, Tesla, because it's more resilient based off of its own personal like fundamentals and the individuality of the stock, won't pull back as much. It'll still be a fourth wave correction. It'll just do a flat correction, or it'll do a triangle, right, or something like this. All still valid fourth waves. It doesn't have to be that the SPY does a zigzag, so Tesla has to do a zigzag, right? So there is room for individual stocks to deviate, and it makes sense because the S&P is a conglomerate. It's a collection of the top 500 companies. So there's going to be companies within that are have terrible fundamentals and are going to pull back the entire market, or vice versa. There's going to be stocks like Apple that are going to bring up the entire market. So you know it doesn't have to be like a sort of one to one with the overall market, if that makes sense. And even in terms, it doesn't always have to be that the market is in a fourth wave, so Tesla has to be in a fourth wave, right? You'll find times where an individual stock can lap the market, right? Like like when you're running a race and you lap everybody, you're still running on the same track, but you're one step ahead of them, or they lap you and you're one step behind them. So right now, it does look like the overall market is doing a corrective move as well, right? So if we were to look at the triple Q, I do think that the triple Q is in a fourth wave correction right now, and I think Tesla is in a fourth wave correction as well, but they might be slightly different degrees. So I guess that's the best way that I can explain it, and I hope that helped you kind of like understand it a little bit more. It's a very good question, and it's something that I used to think about too, like when I first started. And at some point, you just kind of have to um, learn to know where the stock is deviating and where the stock is doing its own thing, or where it's kind of like trading in tandem. Are you in a Tesla trade? I am in a Tesla trade, John. I am. So I'm in a long term, not long term. I'm not an investor. I'm in a swing trade with Tesla. And if you go back to my previous videos, you'll see that I've basically been calling out this move for a long time. My first videos, I only started um, recording my videos back in March, I want to say. So at the time, Tesla was around this 180 area. Uh, this play, had, I kind of just scalped this play. I'll be honest, I scalped and I day traded this because I didn't know what it was doing yet, right? There was no confirmation that this overall correction was done. So I scalped and day traded it. But once we peaked out over here, and once we started getting this pullback, I started considering this to be a first wave move and a second wave pullback. So I was looking for us to come back and fill the gap to 150. So I played that to the downside, and then I've basically been in this bounce move, but I didn't get in right early because I was waiting for confirmation. So I've basically been in a swing trade from here, from around the 185-ish area after we broke sorry, not 185, 188. Above this high is kind of like where I got in because you need confirmation. But I'm basically in a swing position with Tesla. I am long short term trying to recover the large loss I had last year with the plunge. Yeah, no, last year, I mean, it definitely hurt a lot of people. Definitely hurt a lot of people, myself included. I took some losses last year. But that's why I've also switched up my strategy. I used to be a pretty big day trader, and I think different markets come with different trading opportunities. And when you are in a bearish market like that, I think you don't want to swing for long. You want to just kind of like get in, get out, good scalps, good day trades. But I think when you start to realize that the market is back in a impulsive move, whether it's the impulsive move to the upside or the downside. Um, so wait, let me retract what I just said a second ago. Not that when you're in a bearish market, but when you're in a market that is retracing or correcting, which is what I think was happening in the overall market after those 2021 highs. So like in November, this was basically a corrective market. And this is Tesla, but you can see it on a bunch of stocks who were in this corrective phase. So this type of market is good for day trading, in my opinion. Really short term swing trading and scalping, if that's what you're into. But once you can kind of confirm or you believe that you are back in an impulsive move, and I'm speaking primarily from Elliott Wave terms, guys. Once you believe that you're back in an impulsive move, you're back on the right side of the market. I think then the best strategy is to swing because I think that's where the most opportunities come. So I took a few losses over here, not a few. I had good days and I had some bad days. Overall, I was positive, but You know, I've refined my strategy now, and I think this is a strategy that works best with Elliott wave theory and works best for me, like psychologically, are playing long swing moves. So this time I'm not. I'm going to not blindly hold. Want to do better risk management. Thanks, Derek. Oh, of course, Moen. No problem, and thanks for asking. Those are actually like really really great questions. Yeah, I had that sort of like problem as well, right? Which is basically like, and that's not a bad trading execution. I mean, it kind of does fall into that category, but I think it falls more into the category of psychology and mastering your own mindset and um, not giving into to greed, which is really what that comes down to, right? On the other end of the spectrum, there's fear, and that's also a very uh, that's also a very strong emotion to have to overcome is fear on one spectrum, on one end of the spectrum, and the other end of the spectrum is greed. And I know I definitely suffered from on a lot of my plays from greed as well. Like I just wanted to hold on for too long and thinking that okay, this thing can run more, it can run more, and at that point you're not understanding risk management. So you're risking a lot now, especially when you ran up so much and you've made you're up 300, 400, 500% on your trades and you're still holding on, and it's like for what? Take your profit, get out of the play, and now go find another nice trade setup. And that's a psychological thing. That's something that um, you know you learn as a trader as you grow and as you've been doing it for a while. In the beginning, I was very very prone to that. But you get better with it over time. You realize that this trade is not the one and only trade. There's going to be the market is open every day, 5 days a week. You know, and there's always more trade setups. There's always more beautiful trade setups that come up. So don't worry. I think you will do that. I mean, you realize it, right? You realize that you made that mistake, and so this time, just you will have the mindset of just take your profits when you're up and do better risk management in the future. Could it be forming a new gold flag similar to before? Right now, you mean like on the short term? Are you talking about the short term, or are you talking about like the bigger picture over here? On the bigger picture, yeah, it's definitely setting up like a bull flag, right? Which is, um, which is really basically the bounce that we had for that 239 level. So right here we can see it. Yeah, yeah, the bigger picture. So yeah, definitely a bull flag is setting up. If we can get that breakout, we could get that breakout above. Got so many charts, guys. So we definitely have this breakout, this flag forming right here, this downward channel. So that's this for now. Let's make this like that. So yeah, this is definitely a flag type of situation. Good call, good call. And these flags usually form like in the Elliott wave um, when you're getting a usually a third wave move and then a fourth wave move. The best grades are sometimes the ones you don't take. That's actually it's funny, but it's actually very true. Um, another thing that I've learned as I've been trading and is that you don't have to take 1,000 trades. You don't have to take like every single trade, and it's okay to sit on your hand and wait for the setup. And that only comes with like knowing your strategy, guys, and knowing how you like to trade. Like there's so many strategies out there. Honestly, supply and demand. There's smart money concepts. There's Elliott wave. There's stage analysis, and they all have correspond to different time frames, and they all correspond to different like um, take profit levels and stop loss levels, and you know you have to really master your own style. What works best for you in terms of do you understand the strategy enough to incorporate it into your own analysis, and is it something that works with you psychologically? And for me, once I learned Elliott wave theory, I I swear by Elliott wave theory. I know that it has flaws, like any system does, but I know where those flaws are, right? And so I can mitigate my risks ahead of time, knowing where those potential flaws are. But it gives me like target levels to take profit. It gives me areas where I feel like reversals are coming. It gives me areas where my stop losses are already built into the strategy. Um, but also, what it does, going back to your original point about how the best trades are sometimes the ones that you don't take, I won't take a trade, right? I'm called third wave. I name my channel third wave trades for a reason, right? Like, because I told myself I'm going to limit my trading strategy to a particular setup, a particular trade setup, right? So I look for third wave trades. That's what I do. Why? Because third wave moves in the Elliott wave principle are extremely impulsive moves, right? So they're moves that run up or down, right, depending on the market, really fast and really hard, right? So using that form of analysis to find those trade setups, then my strategy is to play swing calls or swing puts, right? So I'm also not, trading shares or things like that, because to me it gives me the best return on a particular setup. So using that strategy, I've been pretty successful, So it's what works for me. So it helps limit the trades that I take because I won't just get into anything. I won't just see like, oh, here's the breakout. You have to stay consistent to whatever your strategy is, and don't fall for FOMO, and don't fall for such and such said this, but somebody else said this. Because not to say that nobody else's strategies work, they do work, but in order for you to be a successful trader, in my opinion, you need to find your strategy. And you can have multiple strategies, but maybe one, two, three strategies, and you stick to them consistently, and you backtest them, and you keep a running catalog of your winners and your losers, and you know keep a trading journal and things like that, and then you improve over time. And, the idea is not to just be a one-trick pony and get lucky one time, but to consistently make money over time. And in order to do that, yeah, best trades are sometimes the ones that you don't take. I 100% agree. You only can control your risk. Um, that's true. That's true. That is true. You can't control what the market does. You can form your analysis, and your analysis is going to be based off of the data that you have at hand at the time, and you have to pull your trigger. And if you're right, and you have the proper trade setup, you'll have like at least like maybe a 3-to-1 risk to reward ratio, or a 1-to-3 risk to reward ratio, I should say. And if it goes in your favor and your analysis is correct, you'll make money. You take profit at your take profit level. And if you're wrong, which you will be wrong, I am wrong, everybody's wrong from time to time. You have yourself covered. You take minimal risk, and if you like in that example, if you have a 1-to-3 risk to reward ratio, it's going to take you three bad trades to uh, basically undo what you would the profit that you would gain if you make one good trade, right? So it's in your favor. You have to make three bad trades then with a 1-to-3 risk to reward ratio. So I mean that's the best way to look at it, and it's a great point. You can't control anything else in the markets but but you can't control your risk management. One great trade can make you huge profits. Oh, for sure, for sure. I mean, it definitely can. But I mean, but that's also like it really depends on what you're in it for. If you're in it to be a trader long term, and you know, then you could easily. I've seen people like during 2020, right, 2021 when we had that whole like COVID like boom and everything, and everybody was getting money from their stimulus checks and just dumping it in the market and not knowing what they were doing. And I've seen people just off of complete luck make hundreds of thousands. Like they made crazy money, right? And the following year, once we got into that retracement, that huge corrective move in 2022, everybody just gave it all right back. So you made a lot of money, but you gave it all right back because you tried to do the same thing, and you had no strategy, you had no understanding of risk management, and you know, so it goes both ways. What are my thoughts on how CPI will go tomorrow? Um, I honestly I don't really know, and I'm not particularly not that I'm not particularly concerned about it. I just think that it's all going to be told in the tail of the tape, right? So basically, I think there's going to be there's a bearish scenario that's going to play out, and there's a bullish scenario that's going to play out, and I will be ready for both scenarios, right? In the case of Tesla, in the case of the market overall, um, I can basically use Elliott wave to draw those two paths that will occur, either a slightly deeper correction on like the SPY and the triple Q, uh, in the market overall, right? If we get bad CPI data, or if we get good CPI data, then um, and then we just continue to rally higher, right? So overall, I think that the CPI data is going to conform to what the Elliott wave principle is showing me, and that is just going to be the catalyst for what the Elliott wave theory is showing me. I think CPI is going to miss expectation. Yeah, I mean, look, there's a chance, and again, like I said, I don't even personally, I don't even um, worry myself about whether it will or whether it won't, because I mean, it's just part of the Elliott wave principle. And once you start to learn the Elliott wave principle and you understand the psychology and the philosophy behind the Elliott wave principle, and really technical analysis in general, then you'll kind of know that it's not so much that the CPI is coming out and it's making the market go down, right? And other people will tell you other things. So take what I say with a grain of salt, because this is my philosophy based off of Elliott Wave and stage analysis, and the traders that I look up to. Um, it's not that those moves are causing the markets to do something new and unexpected. They're already expected, and those pieces of news are just the catalyst to make those moves happen, right? So, like for example, here's the triple Q, right? You guys can see that I already have my wave count drawn out on what I believe is going to play out, right? Now, what it does do is give you a little bit of room to uh, let this fourth wave play out, right? So the fourth wave can be a flat A, B, C, right? To pull back to around 358. It could be a zigzag, pulls back a little bit deeper. It could be a triangle, and it ends up just going higher and just kind of like consolidating into like a pennant type shape. But either way, it's still the fourth wave. So if the CPI data comes out tomorrow and it's bearish, then okay, well, we might most likely get a flat. If it comes out and is bullish, then maybe we'll just pull up a little bit and start to consolidate into this triangle before we get a real breakout. But either way, I still think that this move is playing out, and it's more so of a short term, like where we'll go, as opposed to the long term. The long term is still, in my opinion, bullish, and we're going to get this move to play out. That's how I look at it, guys. So when it comes to like big um, catalysts in terms of like Fed data and things like that, I'm probably not gonna give you guys the kind of answers that you want to hear that other channels will give you. So you may want to take what I say on those things with a grain of salt because I know there's a completely different school of thought on those issues. Matter of fact, I was just watching somebody yesterday who was actually talking about how uh, chartists and technical analysts don't know anything, and they just say that if something pulls back, the reason why it pulled back is because it broke a support level. They don't understand the news or the fundamentals or the catalyst that made those things pull back. And it's not that we don't understand it. It's that A, we don't care for it. We don't care about it. We don't care what was the reason something pulled back. All we care about is that something pulled back or something moved forward because all we care about is the price action in front of us. And it sounds like I, I promise you guys, it's a lot deeper than that. It sounds crazy to say, but when you guys like learn a little bit more about Elliott Wave and some of these other technical analysis strategies, then you guys will kind of understand where I'm coming from with that. How am I risk managing stop losses? So I don't have any like hard stop losses set in place. Like I said, I'm in a swing position. I got in relatively early, so I'm pretty decently up right now. I won't really reveal my actual position. I don't want to do that, but I got in early on the play and I'm up, and so I'm definitely seeing a swing back and forth of my profits, and so it's just you know, the way I think the best way to play it is to just take profits at certain levels as they go higher, which I've been doing, right? So you take profits, you secure some profit, and then you let the play ride out. Secure some profit, let the play ride out. Just knowing that you're not going to be able to time the top, so you get in, you take profits wherever you feel comfortable. Stop loss for me, a hard stop loss would be like I said, the in terms of a swing play, which is how I'm playing it, would be around the 255, 257 area, which is the 21 EMA. What are the levels that I'm planning to take profits? So I've already done it. I've already taken profits on the way up at certain levels, um, but I still have the rest of my position. It's probably why I'm a little bit more calm about the overall play is because I know that I've already secured profits, which is guys something that I personally feel that everybody needs to start implementing is being able to take profits on the way up because it puts you so much more at ease trading um, and making better decisions, right? You're not panicking, you're not losing sleep over it overnight. But basically, the rest of my position now, I'm comfortable with waiting to see the bounce and seeing if we can get to that $300 level, which I'm fairly like based off of my analysis, I think that we will get to. Um, but if not, then if I see more like bearish activity and kind of like a break below 255, I'll just take the rest off right there. 255 is going to become my like hard stop loss. Or I shouldn't say 255 per se because we have a rising 21 EMA. So wherever my 21 EMA is, if we get a hard break below this 21 EMA, that would basically be my stop loss on the remainder of my position. But I'm aiming to get to that 290 to $300 level. Again, there is the chance that we go higher than that, but I don't think I really need to risk it. At that point, the play would be really pretty extended, and I would be pretty comfortable with what I made off of it. So I would just get out around there and then find the next play, which, like I said, for me, most likely is going to be Neo because I see Neo setting up for a pretty decent move. So yeah, good questions, guys. By the way, I love that you guys are asking like all these kinds of questions, and I hope some of my answers. I know you guys won't agree with all of them, and I don't expect you to, nor do I particularly want you to. I want you guys to go and find out how you yourselves feel about like things like um, Fed data, catalysts, and things like that, or risk management, stop losses, and things like that. But I really do like you guys' lines of questioning, and it really shows that you guys are really trying to learn a lot. And not to do like a quote unquote shameless plug, but I do talk about a lot of this stuff, guys, in my courses that I'm working on right now that should be ready in a month. So I really hope that some of you guys who really want to learn about the market in terms of technical analysis, right? I don't really go too much into fundamental analysis. It's not my thing, and I wouldn't advertise it as that. But technical analysis 101, like that's me. That's what I do, and I really would love to see some of you guys, like if you guys are interested, um, go over to Patreon and support me. And I feel like I give good value for what you guys would sign up for. Is it too early to go in on Neo? Wait for pullback to below 10. I don't think it's too early to go on in on Neo. And there's two stage analysis strategies that Sam Weinstein talks about that I didn't really get a chance to go into in my video because that there's only so much information that you can put in a video. But there's your is if you're an investor, and then if you're a trader, right? So depending on your it gives like the ideal times that you want to go in. So if we take a look at Neo right here, in terms of an investor, right? If you were going in for a long-term play, right, and that could even be buying leaps. I would say, um, right now that we confirmed, right, that we closed above our 30-week moving average, is it's a good time for an investor to go in. For a trader, he would say, um, like let's say this is our 30 EMA, right, and it's going to continue to rise now as price action is going up. For a trader, he would say to wait on the pullback back down to this 30 EMA and wait for the bounce and then get in at this point and then ride it to the next move up. But right now, because we just broke above it and we held above it, it could be a solid move, right? You're not going to know where to get out. I mean, you're going to have to kind of like monitor it for like weakness, divergence forming on the RSI, things like that. But I don't think it's too early to get in. I don't think it's too early to get in. There could be a pullback that comes first, right? That's something that I would have to look closer on the Elliott wave count. But I think that we might actually be in a third wave move right now, and let me go to a daily chart, and it could get pretty decently impulsive, right? So this was our let's say this is our first wave up, this was our second wave down, and then this was our. I was counting it in a totally different way. I was counting this as our first, second, third, fourth, fifth, and then we were getting an A, B, C pullback. And it's still possible that we're getting an A, B, C pullback, but if we continue to push higher from here, it's very likely that we are in a larger degree third wave move. So essentially, this was our first wave, this was our second wave pullback here, and then we will just continue to push for a third wave, fourth, fifth, and then eventually we will come back and we'll test that 30 EMA. So then that would be a good time to get in if you miss this run up. But I think this is not a bad time to get into Neo, right? We broke um, this level that I really wanted to break, which was 1060. We broke that yesterday. We're pulling back a little bit right now, but I think if we close above it, we're at 1080 right now. We reached as high as $11.05. A close above this level, I think, is a pretty decent entry point. So I'll leave it up to you guys to see if if that's something that you guys want to play. I do think it'll play out something like this, like a 1, 2, 3, 4, 5 ABC. So I might just wait to try to get in at this pullback, right, which will probably go hand in hand go hand in hand with the pullback to the 30-week moving average. But this is a pretty solid play too right now as well. Not long term, not like too long term, but maybe a couple of weeks out. We could, if this is in fact the first wave move down here, then we could kind of come up with a projection of how high we think this third wave could possibly go to. So, so if this is the third wave move, possibly to $13.58. So maybe a decent move would be to get like $12 strikes a couple weeks out. But time is going to be your most important thing there. So I know somebody who just bought calls over here, and then his plan is if he does pull back to just average down on his calls, and if it turns out to be the start of a really strong move, right? Like a couple of years from now, then so he just bought kind of like leaps. So this way he would just exercise his options and just hold the shares in the future when it comes time to his expiry. If Neo does prove to be a really strong play, getting back up to that like $60 area, he just bought leaps so that he would just basically exercise when the time comes down to it. So wait for the second minor wave to end in the current third if third is just starting. Yeah. Again, I think so. I didn't give it like the closest look on the wave count because I was waiting for a break above this level. So like I said, I kind of was taking this as a 1, 2, 3, 4, 5 over here, thinking that we would get an ABC pullback somewhere back down over here. But it's more likely that it's playing out like this. Like this is our first, second already happened, and now a third wave will be pretty strong pullback, and then another rally for the fifth, and then we'll get this pullback. Right. So this pullback might take a little while to come. Honestly, might like take like a month or two to come if this is really playing out like this. So if you want to get in now, I think that that's not a bad idea. Like this is a daily chart, so this is the level I wanted to see it close above, and we broke above it, so that's good. Let's see if we can hold it by the end of the day, close above it. I would say it's a pretty decent buy, and then worst case scenario, if it does pull back a little bit, um, we're above our 21 EMA on our daily, so that would be a good area to average down if you do buy here and it does pull back. We're above our 21 EMA, so anything above that to me is bullish. So um, if it comes back down there, average down possibly, and you could probably play this for a quick swing trade for like maybe 2 to 3 weeks out, maybe like a $12 strike, something like that. But I personally think that maybe I will wait for it for this setup, right? So by then I'll probably be out of my Tesla position completely, and I'll kind of like wait for this pullback to play out, see how low I think this pullback can go, and then basically it'll give me an opportunity to go for a longer swing trade. I don't really care to risk too much for this quick swing or this quick trade over here. And not that it's not profitable. It's just I personally would rather wait to see like if we how high we can go on this initial move, and then wait for that retracement. See how deep that retracement will go, right? So I would use the Fibonacci tool, see if it comes down to the 61%. See if we bounce off of our 30-week moving average, how close we can get back to it, and then look for a reversal. Because then I know that, let's say hypothetically, this was the extent of the whole move, and then this was the pullback, right? Then I can kind of like get into a longer term swing position somewhere around there and expect a much stronger move to like $24 where I could just buy it buy like 2 3 month out calls, and then just hold and just wait and not have to worry about it too much. And it should be a pretty impulsive move. So I think that's how I'm gonna play it. Um, but again, this could, definitely rally to 14, 15, $16 in the next 2 3 weeks. So it really just depends on strategy you guys want to use. If you guys want to play a quicker play, or if you guys want to wait for that longer term setup. But yeah, Moonji, to answer your question, that's exactly what it would be. All right. So if this is the third wave move, um, well, I mean, honestly, if this is the third wave move, then maybe the second wave has really happened already. I mean, I would have to zoom into a smaller time frame, right? Assuming that this was our initial pullback, right? Uh, Here, let me analyze it on a different chart. Give me 1 second. Looks like we're getting a pretty decent push on the triple Q, by the way, guys. Triple Q looks like it broke out of that resistance level, and SPY is really pushing too. 441. Wow. So there's a little bit of divergence with Tesla. I know Tesla's starting to rally too. But see, Tesla, this is a perfect example. I forget who asked it. It was a U Moon, um, about like they're both moving, but they're in different stages of where they are in their count right now. Because we haven't broke out of our resistance right now. But back to Neo really quick. Let me show you guys on this chart. See if I can do a wave count for you guys. 2 hour chart. So this is our bottom right here, right? Around $7. That's our bottom. That's our stop loss area for the overall play. I mean, not our stop loss area, but our level of invalidation. If it were to come down and break below this, then we know all this doesn't count. Um, so tentatively, right now, I would say this was our first wave, our second wave, and yeah, we're in our third, fourth. Uh, Change this right here. Right, so this could very well be the play right now, guys. I think. And then within this third wave move, we most likely already had our first, second, and third. Sorry, first and second, and now we are on our third and third. That's how I think it's playing out right now. So that's minor second wave, maybe done already. Right? So does that kind of make sense? So you have like your first wave, your second wave, right? We can measure this second wave move right here. That's a perfect 61.8%. You guys can see that. I didn't draw it perfectly, but it's basically in this 50 to 61.8%. It's an ABC, and from there, 1 2 3, you can measure this move. And then we can. So originally, I thought that this was a first, second, third, fourth, and then a fifth, and that could still be the case. But the fact that we broke above this top 10 on what would be a B wave, right? Because this isn't a deep enough retracement. If this was the top of our first over here, this isn't deep enough of a retracement. So then what that would mean is that this was our A wave, this is our B wave going higher, and then we are getting a C wave, which could either be an expanded flat or a running flat. Um, so it could pull back over here if it's a running flat and then bounce higher to start the third wave, or it could pull back lower from this level um, and then start the third wave from here. That's if we take that as our top of our first wave, which is possible because there is a divergence from here to from here there is divergence, right? So I do like that better, but then that would mean that this is most likely a running or expanded flats. This is your A, B, C. I feel like I just it wouldn't be bad to get a starter position over here, and then if if this makes sense to you guys, like based off your own risk and your own financial situation, to take a position over here, and then if there is a pullback um, to average down where you see a bullish reversal. But you know, because this could either be the start of the third right here, or this ABC is playing out soon. So if you don't want to take that risk that we could get this C pullback, I would say just to wait it out right now. Um, because right now the wave count isn't 100% clear. There's a couple different possibilities. Well, I mean, medium to long term is still bullish, but it's just a matter of whether or not we have this one more pullback left in it before we bounce higher, or are we just going higher straight from here? So that all really just depends on if this is the end of the first wave, or this is the end of the first wave. So I could see it both ways. But then so that's the wave count. But then um, I think it's a buy right now because it broke above our 30-week moving average. I'm holding above it. We're above our 21 EMA. So just using those other indicators, I think it's a buy, and a worst case scenario if we pull back to just average down around 21 daily EMA. Sorry guys, I get lost in this stuff and I go on tangents. So feel free to reel me back in. Big red candle on Tesla. Yeah, I see it. I see it. We're still, I mean, trading in this range though. Let's see. I mean, we might break out this time because now we've before the resistance was getting weaker because we kept testing the resistance, but now we've actually been testing the support multiple times, and it's probably making the support weaker. We're getting the big red candles. We are below our 50 on our RSI. We're below both EMAs. We got the crossover, and volume is picking up on the downside. So there is a chance that we'll break this support now, and then we'll have to go to our next support level, which would probably be around here where we bounced yesterday around the 265 area. So let's see if we hold or if we fold. But basically, yeah, I mean, all day today has just been trading in this range, which is kind of like what we expected. Tesla seems to be on a short-term bearish move. I mean, I can't really say that it's bearish in the sense that I mean, yeah, I guess you could say that it's bearish because it's a correction. Um, and we had this strong pullback, and we had this pullback. Right now, it's just more so like really short term is just sideways trading, which again really is just building a level, just consolidating, building a base on which we can break out of. But yeah, it could pull back. And again, I mean, it's doing that mostly, like I said, because most likely, um, who knows really why it's doing it, but the uncertainty in the market, the uncertainty with Tesla's earnings. Do you think Tesla will close 280 by Friday? Um, it's hard to say. A lot of that is going to depend on the CPI report tomorrow, right? So because we could either get bearish news, which will make a bear scenario play out, right? Which is basically just a steeper retracement, or we get bullish news and bullish data, and that will basically cause us to rally in this move right here. Overall, my bias is towards the upside because I believe um, I believe SPY, triple Q, the market in general is looking more bullish. Right, I have a count for the overall market that I think is more bullish, but to put a timestamp on it by Friday, like I said, we could get bearish news tomorrow, and it won't invalidate this count at all. It'll just make this fourth wave play out to the downside a little bit, and then we'll rally higher. So, you know, it, long term I'm bullish, but by Friday, any honestly, I just feel like it's too short of a time frame to know exactly what's going to happen with the exact scenario. Right, this is where I think that we're going. I just don't know what path we're taking to get there. If that makes sense. So short term, like my short answer is that if CPI data is bullish tomorrow, then I do think that we will push to 280 on Tesla, right? I do think that this correction is playing out, and it's close to finishing up if it's not done already, and from there we can then just push higher. But I don't know if it'll all happen within the time space of from now to Friday, because we could pull back before we bounce more. We could pull back lower to 260, possibly even 255 before we get a bounce. So if we pull back to 255 and then we bounce, we might not reach 280 in time on Friday. It's a tough question, Adam. Is it Adam? Adama. Adama. Um, so it's a tough question, and time is usually the hardest aspect in technical analysis. Projections and stuff are can become pretty can get very close to being like 100%. Sometimes you can't hit it right on the head, but time is always really tricky. I would say if you're asking that, you know, in order to buy calls for this Friday, I would just say that's more of a. I would just say there's a lot of risk involved in that, so just be careful. I would give yourself more time if you can. So again, guys, this is the slightly bigger picture if we just zoom out of that like range trading that we've been doing for a little while, and let's just kind of take a look at this and see what do we think is really happening, right? So this is kind of just what I want you guys to start looking at when you're looking when you're getting into these plays, right? What exactly is playing out over here? Take a look at the price movement, right? So compare right from this peak over here that we hit, how price has been reacting in this range compared to how price reacted before that for us to get up to that range, right? So sharp move up and then really just sideways movement, right? So seems hard bounces from 267. Yeah, I mean that area has definitely been our support, right? So like if you see, we've been closing, even though we'll wick below it, we haven't closed below it yet. I mean, well, actually, this is a 30-minute. Sorry, I thought I was still on the 5 minute. We have closed. We just closed below it right now, but we closed below it one time prior, and we bounced back. Let's see. We have about 3 minutes left on this candle, so let's see if we bounce back into this range. It looks like that's what it's trying to do. So really, it's kind of like not so much a support line as it is a support zone, kind of. So we could just draw that out. It's kind of like from here into this range right here that's really been providing us some opportunities to bounce. It's not necessarily a demand zone because it's not like prices coming in here and we're taking off, right? It's not like there's um, crazy demand zone there, but it's definitely been area of support for us. That every time we come into this area, we seek to bounce back. So that I mean that's good news. That's good news. Um, but back to like the bigger picture that I was talking about, guys. Like I just want you guys to realize why I'm still sorry, not bearish. Why I'm still bullish on this. Um, there are a couple of bearish indicators, right, that are playing out, but I don't think they're that um, concerning, right? And the number one bearish indicator is on the RSI, which I what I want to show you guys, and that's that divergence, right? So let me hide some of these drawings, hide this, and let me get rid of this. Right. So we have clearly from this peak, right, to this peak, we went higher. Okay. Let's do that in yellow. But if you look at the RSI from this peak to this peak, we went lower. So that's a clear example of bearish divergence, right? And that normally signals a pullback. But now from that point on, right, the bearish divergence has kind of, it's not that it's been ended or eliminated just yet, but since that point we've been pulling back, and RSI has been pulling back with us, right? So from this point on, we're still forming, um, it's still moving in tangent. So yes, I think this bearish divergence signaled this pullback, but from here to here, we're making lower highs on the RSI and on the price action. So we could easily eliminate even this divergence if we just bounce back from here and go higher, and likewise do so on the RSI, which the RSI is getting close to a overly sold area. We can easily do that, and we can come back and eliminate this divergence that we see playing out over here. So that's really the only bearish, like strong bearish sign that I'm really seeing, right? In terms of everything else, in terms of the wave count, you know, I think there's room for another wave higher. Um, in terms of this, looks like an impulsive move, and this looks like a corrective move, right? Just compare it. Um, holding above certain levels. The um, the low volume has basically been on the pullback. It hasn't been on the move up, right? So if we go to let's just look at it in terms of a daily chart, right? This low volume has really been more so with the pullback. Before that, we had pretty decent volume going higher. But I do think that within our third wave move, this was the top of our third wave, right? So now we are in a fifth wave move, finishing up our third wave move. So you're going to start to see that divergence still happening, but it doesn't have to necessarily um, just price doesn't have to tank from here. It could still go higher, and this divergence can continue to play out, right? So, do you look at open interest and volume on the option chain? I do. I do sometimes. I know that's definitely a strategy that you can use to determine like supports and resistances and price targets as well, based off of the open interest and volume option chain. I know a couple of traders who do that. I don't do it as heavily. I primarily stick to the technical analysis from like my wave counts and my charts. Give me 1 second, guys. I'll be right back. Just gotta run to the bathroom. Looks like we're back in the in this trading range, so nothing too exciting happening right now. Maybe we might get something happening in the closing hours, but well, maybe I spoke too soon because we're pulling back now. Oh, and there we go. There we go. We must be getting some kind of sell off from the broader market. Yeah, look at that. Look at that pullback on SPY and on triple Q as well. We get pullback on triple Q. Not so much on triple Q, but pretty strong pullback right there on the SPY, and that's definitely affecting Tesla. Spoke too soon. Still holding in this area right now though. Let's see how far it pulls back. Our next level of support would be that 265 area. And keep in mind, all these levels where we're bouncing off and we're finding support, none of it invalidates the overall count and the bullish move up. So that's why I don't get too worried about it. It's just the wave count playing out. But you see, I'm not sure if I'm saying your name correctly or not, Adama. But you see why I mean, like it's really hard to say that, like, because we don't know where we're ultimately gonna find the bottom first, right? Maybe the bottom will come at 255. So we could still be bullish, but if we go down to 255 before we bounce, then the chances of us hitting 280 by Friday are pretty slim. If this was the bottom over here and we were gonna start pushing higher, I think definitely, like, if we're gonna start the next move up, but we can't really safely call this the bottom yet. So it's kind of hard to see where we'll be by Friday until we can kind of like safely say that we found the bottom. So we kind of just have to monitor it and see how this plays out for now. But I think the bottom will be in by tomorrow, right? So even if tomorrow the CPI data comes out bad, I think that will ultimately, and we pull back, that will be the bottom tomorrow, in my opinion. I feel like with some level of certainty, I can say that, right? Either we will rally higher, or that will be uh, that will be the pullback. That will be the bottom tomorrow, and then we will bounce from there and start to go higher. So depending on how far we pull back by tomorrow after the CPI data, I think we'll have a better understanding of whether or not what level we could reach by Friday, if that makes sense. Oh, awesome! I got it right. Cool. All right. I'll be right back, guys. Just gonna run to the bathroom real quick. Still holding this level, so let's not panic. Let's see if we can get it back up. I'll be right back. Sorry, guys, I'm back. My daughter woke up and I had to take care of her for a little bit, but she's fine now. She's good. She's relaxing. So I may actually have to end the stream a little bit early today, so I might not be with you guys to see us close. But it's 1 o'clock right now. Probably like around 1:30, 2 o'clock. I might have to head out. I have something pretty urgent that just came up. But in the meantime, looks like we got a strong bounce. Uh, Pretty decent. But we're still in this range, right? So I'm glad that we were able to hold over here. We're really forming a solid support level over here, even after that strong sell-off on the SPY. SPY also recovered a little bit, and triple Q is uh, triple Q is holding a little bit as well within that within that range. So you can see, guys, it's not just Tesla. It's just the broader market just kind of like sideways trading and consolidating because of the market uncertainty. So nothing like specific to Tesla, which is why I don't think this Tesla play is over. The pullback is more like macro market related than it is anything to do with Tesla, in my opinion. Seems everyone left. Yeah, I mean, probably don't have probably because I was out for a little bit, but sorry. Sure, everybody's pretty busy, and honestly, it's not the most entertaining price action right now. So I don't blame people for tuning out. Honestly, you guys could just if you want, like, set a price alert for yourselves if you guys got things to do, and set a price alert at 270. Just this way, you guys don't have to necessarily watch all this chop. But if you guys have any other questions and stuff you guys want to shoot my way, or you guys just want to chat, then hang out, hang out for a little bit. I'm still on for like another half an hour for sure, and then possibly up to 2 o'clock. Just waiting on a pretty urgent call, and then I'm gonna have to head out. But hopefully we won't miss much because, like I said, tomorrow is gonna be like the real important day, right? So we'll see. I don't really expect too much to happen right now. Probably even like in the pre market or the after hours. Tomorrow will really dictate, in my opinion, what where we go. So whether there's going to be more pullback or whether we're going to bounce here and try to climb back up. So just hang in there for one more day. I know all last week was so last week was interesting because we came out of the weekend knowing that we had like a $20 gap up, and we started on Monday, and then instead of getting an exciting week, we just pretty much consolidated and started pulling back. So I really want to be on live with you guys when we really break out. Which, knock on wood, I'm hoping that we break out. I would really love to be on live with you guys too because I think we earned it. When will I have the Discord set up? I'm really aiming to have it set up by the end of the month. So not the end of the month, like within a month's time. I think I still have a little bit of work to do with all the courses. I'm trying to put it together in a bunch of different formats. So courses will be up on the Discord. My analysis on a bunch of different stocks, like where you guys can just go in and, like, let's say you guys have a question. Like, let's say you guys have an idea of yourself of a particular stock that you're interested in. If it's a pretty decent ticker, if there's a lot of popularity behind it, most likely I'll have it up there. Or you guys can just browse through it and, like, for example, just click on Neo, and I'll basically have like pictures showing where I think the wave count is, why I think it's a good trade setup, potential stop losses, potential take profits, Fibonacci extensions, retracements, and for every stock, and I'll keep updating them. Probably I'll update them like every week, so you guys could just check. You don't even have to necessarily discuss it with me, or you don't have to necessarily wait for me to drop a video or something like that. You guys can just go in, find the ticker that you're interested in, and see my potential analysis on it. Right. So I think that would be pretty useful. So you'll get my analyses on different stocks. You'll get obviously the group chat uh, where all of us will basically be talking about different stocks that we're looking at, cryptos, whatever. And I'm not going to just limit it to stocks, the trade opportunities where we can all just chat amongst ourselves and share our ideas and stuff like that. You'll have access to the actual courses, right? So Elliott Wave course, technical analysis course, stage analysis, supply and demand, and I'm making them very, very detailed for you guys. So if you guys want to just pick them up yourselves, print them out as a PDF, or watch them on like a PowerPoint slide and go through them yourselves, so you guys can do that. And then I'll also be scheduling um, probably like a couple of days. I'll have like probably like Monday, Wednesdays, Fridays, or like Tuesdays, Thursdays, something like that. Like 1 hour for like a wave course, 1 hour for technical analysis, and we'll just treat it as a class. And whoever's interested and wants to join those classes, those will be basically live classes that will use the slides and stuff that I'm putting together as kind of like the textbook for the course. And so you guys can read that beforehand. You guys can read it afterwards. If you guys have questions when I'm presenting it, I'll be doing it like writing on like a chalkboard basically for you guys and giving you guys like live demonstrations. We'll analyze charts together. So I'm really, really trying to make it a very like detailed and thorough course tutorial for you guys. So this way you guys can, because there's a lot of information that you guys can get on YouTube, but it's not, in my opinion, I've pretty much seen everything that there is on YouTube, but it's not the detailed type of stuff that you would get in a real course, in my opinion. And some of this stuff goes into like a lot of detail. And so there's the beginner's course for Elliott Wave that really just teaches you the basics, and there's more like intermediate where you get deeper into the wave counts and Fibonacci levels, and then like a more advanced course as well. So I'm pretty excited about it. So if you guys are interested, like I said, you guys could always just hit me up privately. You guys can hit me up on my Instagram, um, and I'll take you guys' names down and stuff. You don't have to go to the link right now. The link is up right now, but it's not going to be really available for like another 3 or 4 weeks. So just so I can like kind of like gauge the interest level of who's interested and stuff like that. Um, just hit me up privately. Let me know if you guys are interested. Um, there's three different tiers, so I kind of just gauge the interest and everything. I think it'll be fun. And I think you guys. I'm trying to pack as much useful information and value into it as possible, and something that I wish that I had like when I first started trading. So if you guys kind of like enjoyed just how we've been hanging out over here on the live chats, you guys have been enjoying my videos in general, and you guys want to learn more about Elliott Wave and how, and everybody uses Elliott Wave in their own kind of way, right? Um, show you guys how I use Elliott Wave and how I use other indicators and stuff. I think it'll be a really dope course for you guys, and I think you guys will get a lot of value from it. Live streams. Thank you, Javon. And honestly, the live streams are something that is also going to be um, on the primarily. I'm going to give preference to the Patreon with the live stream. I'm going to try to do like probably live streams like once a week on YouTube as well, or maybe once or twice a week on YouTube. But it takes a lot of time, and right now I have a little bit of time, which is why I've been doing it. But I'm also kind of like in the middle of transitioning to a new job. So my last job just ended about a month ago, and I've already been accepted for a new job. So that should be starting in 2 weeks time. So my ability to be able to do these live streams like this, I'm not gonna be able to do it as frequently, right? So if I do it on YouTube, it'll be a lot more rare, and preference is going to be given to the Patreon. It's different that you're giving live updates. Keep going. Thank you, Javon. I appreciate it. There was yeah, I don't know how many people are still doing lives. I know like live streaming and stuff was really big. I want to say like during COVID, like during that time, like 2020, 2021. I know a lot of people were live streaming and watching like AMC and GameStop, and I'm sure there's still a bunch of channels that are doing it. I personally haven't come across anybody who live streams like their like Elliott wave analysis and stuff, which is why I feel like there is a there was a opening for me to kind of like come in and show you guys my form of analysis live. Which if I could do this live all day, I would prefer that. I enjoy it more than just making videos and stuff. Are you going to be a full time trader? No, I wish. I wish. Actually, no, I don't know if I wanted. I don't know. There's I enjoy trading a lot. I do, but it's I feel like it would be difficult to be a full time trader if that's like the only like. I feel like I'm a better trader because I don't just rely on my income from trading. If that makes sense, because when you have that amount of pressure on you, where it's like your bills are being paid from trading, then it could really put a lot of pressure on you or make you make bad trades and decisions. So I don't know if I would ever want to be a full time trader like completely, um, but no, it's not a full time trading position. I work I do others I do I can tell you guys I basically I work like in the banking industry. It's called the AML industry, which is pretty good. It's solid. It's doing a little bit of like analytical work, so it kind of like goes hand in hand. You know, doing analysis over here. So my last project ended, and looking to start a new project now. So, but I definitely enjoy trading. I definitely like in my free time. I'm always like trying to learn more, read more, understand charts better, back test, do things like that. So I don't know. Maybe I could be a full time trader. That was a nice little green candle. Um, I agree. I think we may see another push up to the top of this channel. Honestly, like the way that we've been range trading between these two levels could have been decent scalps. Like a rejection at the top, scalp down to the bottom. So, but I mean, it's not my style of trading, but I know people who trade like that. Just trade like a go heavy in on scalp and just play the range trading game. Can trading provide time freedom? Um, yeah, I mean, I feel like anything can really provide freedom if you become successful to that degree. There are, I mean, consistent traders. I feel like too much is made of, and we probably see it a lot on social media and stuff like that, where you see people who like, I made $1 million trading XYZ, and here's the secret, and not saying that they did, and not saying that they didn't, but I think those are more the anomalies than the those are more the outliers than the rule, in my opinion. Right? Trading can provide you with time freedom, but it depends on where you're starting from. It depends on it's like any other profession or any other craft. You have to work at your craft and get good at it. And if you do, it definitely provides you with an opportunity to if you know what you're doing to get that level of time freedom and stuff. So it can, but even if you get really good at it, I think that the number one goal is to just be a consistent trader, and you know, and to just be consistent in your trade setups and making money every day. If you guys think about it, like I mean, it all depends on what's considered like everybody has their own level of what they would consider successful in terms of like financial and monetary like gain. But on a you can take a level of just basically saying, yeah, well, if I made $1,000 every week, right, that's $4,000 a month. Or if I made $2,000 every week, whatever your level is, right? Um, and if that's supplementary income, or if that's your entire income, it will all basically depend based off your goals and what you want. But if you come up with a number like that, then you can just tell yourself, okay, if the goal is to make $1,000 a month, for example, right? All you have to do is make $250 a day. And if you just make $250 a day, like find one or two nice trade setups. You don't have to go in with too much. You figure out your risk, your reward, and and then you just play it that way. And if you work in small increments like that, it makes you consistent, and it makes you have a game plan. And you don't overtrade, you don't undertrade, you don't over leverage, under leverage. But you really have to give it that time, and you really have to give it that you have to give it a lot of thought on what you did it for. I think too many people get into it thinking that they're just going to hit the jackpot, and then at that point you're just gambling. And a lot of people can make money gambling, but it's there's a difference in my opinion between gambling and trading properly. So that's just my 2 cents. I don't like the 9 to 5 job. I like the idea of trading and making money. I'm with you on that. I mean, I'm sure most people, if they could, would trade their 9 to 5 for 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 the opportunity to make money on at their own pace and leisure, right? Um, but again, there's a lot. I don't want to just glorify it, at, without giving like the proper level of um, respect that it deserves, because you could easily lose money, right? You could easily lose money. Even great traders who know what they're doing and who've been doing it for a long time, they lose money. Not like overall, but you have days where you lose money. You have days where you make bad trades, and you just have to know what you're getting into it for. Absolutely, yeah. You have to put the time in. You have to put the time in. You have to just give it the proper respect that it deserves. Like I said, like you have to treat it like any other craft. If you were playing sports, and I was big on basketball growing up, and you know I was I always wanted to be like Kobe, rest in peace, Michael Jordan. They were all about work ethic and hard work and that Mamba mentality. And I would just spend hours and hours and hours and hours in the gym, like so much time in the gym. And I just wanted to get as good as I possibly could get. And it's the same way with trading. It's a skill, right? Like there are different levels of skill. Risk management is a skill. Like let's say ball handling is a skill in basketball. Uh, Analysis is a skill, just like shooting is a skill. Trade execution is a skill, just like you know working on your driving ability, working on your athleticism. You have to put the entire package together, and it takes people years and years and years to refine their strategies, like fine tune their strategies, back test their strategies, see what works for them. And even when they do that, the markets are always changing. What worked in one particular time period is not going to work in the next like time period, right? What worked in 2020 to 2021, if you try to implement those same strategies, which are particularly like breakout strategies, they they didn't really translate well to like the end of 2021 to 2022. So you're always in the lab, right? You're always working on your game, so to speak, and getting better at it. It's definitely a lot of work. You know, going on a little bit of a tangent here, but that's because the price action is so choppy. There's not much to really talk about. But I think there's a lot of there's definitely a lot of opportunity in the markets for sure, and it's just a matter of just learning as much as you possibly can. So yeah, just to go back to the original question, the Discord will be up hopefully, like I said, within like 3 to 4 weeks, and if you guys are interested, then just let me know. We'll be doing mostly my live streams. Will carry on over there. We'll look at all the and it won't just be just Tesla at that point either, right? Well, whatever stocks and tickers and stuff you guys want to look at, we'll pull those up. We'll take a look at those. You guys can let me know what trades you guys are in, and at that point, I'll feel more comfortable, right? Because it'll basically be on our own private channel. It won't be on YouTube to like let you guys know what my personal trades are, where I'm getting in, where my stop losses are, and things like that. So learn more, trade less. Absolutely. Well said. Well said. You know, the other thing is that the more you learn, right, the more you learn that there is more to learn because there's just so much out there. There's literally so much out there. And I actually spend more time, I think, studying now um, than I do. I wouldn't say that I do trading, but I trade less because I make less. I make less trades, but I make better informed trades now. Whereas before, when I first started and I had no idea what I was doing, I could show you guys. I probably have screenshots like on my phone where was like in like 20 positions. Like I'm talking about when I first started. Like, I would trade on Robinhood or Thinkorswim. I had no idea what I was doing, and I was opening up positions left and right. I had like 20 tickers uh, that I was trading, calls, puts, you name it. And then it's just like, for what? Even now, I think anything more than three trades, in my opinion, at a current time is, I, it just means to me that you're not making. I mean, I can't really say that because there's different strategies and some are shorter positions and whatnot. So I can't really say you're not making well informed decisions or you're not making well informed trades. But I feel like if you just like limit your trades to two or three good trades, you'll do perfectly fine. I still don't have any idea what I'm doing. um, I mean, you sound like you're pretty knowledgeable. I mean, you were mentioning a couple of things earlier about like range trading, and I still at first I was just in it for the money. Now I'm all in the process. Those two trades are usually the best. Process is important. You can't rush the process, and that's something you learn as you grow as a trader, as you spend more time on it. And it's like with anything again. It's not just with trading. So I usually make the analogies back to sports because I played sports a lot growing up. But yeah, you can't rush the process. So yeah, I mean, it doesn't necessarily have to be your first three trades, but just my point in that is to say that if you limit how many trades you make, right? Like if you told yourself, like, okay, I can only make three trades today, you're going to be very careful on what three trades you get into. You're not just going to be like, all right, you know what? Let me just take a YOLO here. I'll just take a chance here, and if it doesn't work, then I'll cut my stop loss. Like no, like I think what it does is it forces you to become a more disciplined trader. So like another thing I'll share with you guys, I'll put it like on Discord and stuff, is the trading journal that I have, and I think keeping it's like just an Excel document that I made up, um, and you guys can use that. And one of the things that I do is every trade that I get in, I have to have a plan and I have to write out my plan before I get in. So, for example, if I'm getting into the screenplay like I was with Tesla, um, what's my entry point and what's my reason for getting into the trade? What's my trade setup, right? So for myself, I would say like it's a long term, third wave swing setup, right? Um, and what's my entry? What's my take profit? What's my exit? Um, how strongly do I feel about this play? Like, what's my level of confidence in the play? And like, I'll fill out all of those things, and I'll put like a brief summary of the trade, and it makes me make more informed trades. And then you can go back and you can look back and you can analyze like, okay, this was a great trade, or this was not such a great trade. And then you can tell yourself, well, I'm going to avoid these setups now if this was a bad trade, or this was a really good setup, it worked out to perfection. I'm going to look for more setups like this in the future. And that's basically how you build your trading like playbook, right? So yeah, I'll share that with you guys as well. I'll put that on Discord. There's definitely a lot of things, guys, to discuss and to talk about, which is why I'm really excited that I took this leap because I've been trading for a while now, but and I always thought to myself, well, maybe I'll just do videos on like YouTube or something, but I never really, I never really did, and I would see everybody make YouTube channels, and there's some really good channels out there, in my opinion, and then there's some like really just like whatever channels out there. Um, and I finally had time, and I finally had the courage to be like, you know what, let me just get on and share what I know and see if it hits. And I'm glad that you guys found me, and I'm glad you guys are enjoying the content, and I'll continue to give you guys as with the best content that I can. So thank you, Love Never Fails. Thank you, Javon. Thank you. I honestly like you guys don't really realize like, but that just actually makes me feel like it makes me feel really good. Honestly, like that's my number one thing is my content useful? Like, and am I helping you guys? So I'm glad to hear that. I'm really glad to hear that. I really appreciate you guys. All right, guys. So this is looking like we may just continue to range trade for the rest of the day. If I'm gonna have to step out though right now. I just got the text, so I'll have to step out right now, which is fine. I'm not gonna leave this on right now because I actually need to take my laptop with me. But I will. If I can get done in time, I'll try to come back a power hour. I don't think that I will. Maybe I'll be able to catch like the last 30 minutes of the day. Most likely we'll just stay in this range. If we break lower, guys, I'll just leave you guys with a little bit of what I'm seeing. We have support at 265 as well, but I think that we'll just continue to trade in this range. If we close above 270, like in the last 2 hours, that would be really strong going into tomorrow. Tomorrow we obviously have the CPI data, so I'll be back on tomorrow morning for sure, and we can talk about that, and hopefully we'll be able to watch CPI data come out and see if we can get the strong bounce that uh, we're anticipating with Tesla tomorrow. But yeah, I think it's just going to be a little bit of a choppy day. So if you guys want, even for yourselves, just set some alerts for yourself, so this way you guys don't have to necessarily watch all of this. But if you set an alert at like the 270 area as you get closer to it, then you'll be notified, and then you guys can really tune in. But yeah, that's really it. I mean, the bigger picture, you guys know. I didn't really discuss it that much, but you guys can see we're on this ascending level of support right now. So um, I think we could pull back to like that 265 area one more time, but we don't necessarily have to. We're finding good support around this area, and I do think we have a couple of waves higher to go. So that's the overall bigger picture. I think we're finishing up, if we haven't already finished this pullback yet, then we can resume this move, right? Have this pullback as well. So I think there's still a lot more upside to play, guys, on the bigger picture. It's just a matter of just weathering this minor storm right now. All right. So thank you guys. Thank you guys so much for tuning in. If you guys could just please go ahead and hit the like button before you guys head out, and I'll be back if not later today, then definitely tomorrow morning. Appreciate you guys so much. We'll talk more soon. Peace.